Thanks so much for coming on Liquidity Goblin.
Thanks. Good to be here.
So just to start off pretty broad, could you give us a bit of an intro to yourself and how you got into trading?
Sure. I had sort of like a less than traditional path into trading. So I started out as a annoying software and computer science undergrad, doing everything and anything that I sort of wanted to do to try and find interesting. So I ended up doing AI stuff and AI research and getting super into data science. I was doing some work in sort of the medical field and some sort of engineering AI stuff, and ended up catching the eye of someone that used to tutor a course I was doing, who was working in prop trading, who did engineering, and talking and asking if I was interested in a job, and one thing led to another, and ended up with an internship. I enjoyed the internship, so I took time out of uni to do that job, and then one thing led to another, and I ended up being a part-time quant researcher whilst finishing my degree, and then end up down there doing trading, mostly in sort of options market making, quant stuff, and Delta One HFT stuff. Then ended up in crypto at that same place. Then left, and now I'm sort of on a rocky path on my own with a bunch of other friends, doing interesting and different stuff in crypto, on chain and off chain, anything where we think we can find an edge.
Yeah, it's funny. You've been doing it a few years, but in crypto, you age like a dog. So it probably feels like a lot longer from 2021 or 2020 till now.
For sure. It feels like the last 2 years are the majority of my career, but it's that's not the case. But yeah, it definitely feels like 5 years I've spent in crypto and 3 years I've spent in tradfi, but that's life.
Yeah, I think it's the weekend work because on the weekends you're at your desk. Well, I know you are because we talk all the time, but some people might not be. But well, just to sort of look at your early career, did you have any trading mentors, and was it, or maybe just people you worked with, and were there any lessons you picked up from them, or any anecdotes that sort of made you think about how to trade and just sort of that just impacted you, I guess?
Yeah. So the interesting thing is, I didn't come into trading knowing lots about trading. Like, I didn't know what long and short meant when I arrived. And I was just thrown into the deep end, looking over the shoulder at these guys doing options market making. And they're like, I want to be long gamma, short gamma. And I was like, what? What do you mean? What do you mean you can sell something you don't have? And so there was quite a steep initial learning curve. Um, and so I was lucky I didn't come in with I guess a rigid or preconceived notion of like what trading is or what trading is going to be like. Um, I built some along the way that ended up changing and sort of getting quashed, and I learned a lot from different things. And I guess I had a few mentors that mainly like the people I was working with. And I guess some of the most important lessons I learned from that is probably, I guess, discipline, knowing edge, and being skeptical. I think probably being skeptical being number one. Like, why does this look like I can make money? Like, why isn't someone else taking this? Like, asking a bunch of questions, and always like looking for edge, but always being skeptical of the edge. Yeah.
Yeah, I think as a background in market making, you'd probably be so paranoid about adverse selection. So you see a situation and it looks profitable or an edge, and immediately it's gnawing at you. Well, if I can see this, and let's face it, unfortunately, we're not the smartest people in the world, especially in trading. So, it's if this opportunity is here, how is it here? What am I missing? How come no one else is seeing that sort of thing?
Yeah, exactly. Like, these numbers that I'm looking at on the screen are being watched by tens of other teams around the world, all with people vastly more qualified than I am, and all with people on their team vastly more intelligent than I am. So it's like, why do I think I can make money doing this when other people have seen this and said no? Like, is it that they've not looked at it? And that's like, sometimes that's the case. Sometimes it's compliance. Sometimes it's other things. It's like, you've really got to drill down into why before you can confidently put money into it.
And is that what you learned on the desk? So when would you ever? I know we're going to keep it vague, but was there any times where you sort of had an idea? Would you bring it to the head trader on the desk or whatever, and they'd say like, okay, well, why do you think this exists? Or when you came, is what I'm trying to say is, would you lean first on the story and then the data to back it up, or would you be bringing the data and then the story to back it up?
At that point in my career, I was all data driven. I wouldn't go beyond that, which is something that's changed since. But everything I did, I was trying to do with numbers, and I thought that was the only right way to do things. And when you're doing systematic stuff, it's definitely a good thing to be doing. On special situations or like long tail events like that where there is no data for it, it's not the right thing to do. Um, but in general day to day, and like especially with volatility, like previous volatility is a good predictor of future volatility. So like in options, it's usually a decent thing to be doing. Then I would usually try and tell the story with data and visualizations, and working through the process of doing something naive and getting slightly more complicated. I used to desperately try and apply complicated models. Like coming from ML, I just really wanted to try and work in some form of machine learning, some form of like maybe a Bayesian network or something. But like pretty much everything that ended up actually being used was some form of linear regression, but with a twist. Like instead of regressing to the mean, it was maybe regressing to the median or to a quantile, or being a bit smart about my feature selection, reducing the what you call the probability space. And so like I learned that as like a bit of a feedback loop, because I'd come up with an idea, like a model. Like one of them, for example, was I was trying to predict volatility using like a neural net, right? And I took it, and they asked like, "What's your benchmark?" And I hadn't actually benchmarked it, and so they were like, "Okay, go away, benchmark it to a linear regression." And lo and behold, the linear regression performed just as well, if not better, when we forward tested it. So it's like, the I guess the important lesson, the twofold: not only to be skeptical, but like don't overthink it. Just get something working that's robust, and then work from there. So like smallest leap, get it working, and then you can actually trust it. Like I can trust a linear regression because I understand what it's done. Whereas like, don't think I can trust, or the traders could have trusted like a machine learning model. So yeah, I guess do something simple first and try and make the smallest leap at a time, rather than trying to jump to some fancy model and be skeptical about it.
You said something about how you used to, and how when you started, and sort of that sort of phrasing. So I'm assuming that obviously from everything you said, you don't look at it that way anymore. Was there an experience that you had where maybe in crypto, how it didn't, you know, or did something happen where you sort of made that flip from like quantitative? I know you still do a lot of quant stuff, but from quantitative approach 100% to a bit more qualitative and understanding it's a bit more nuanced. Was there an experience, or was it just with time you understood like everything can't be explained in numbers and things are complex and there's often players doing things? Or was it, yes, was there an experience there, I guess?
I think at the time I was like definitely chalking it down to like a difference of opinion. I thought like, there was a bit of arrogance in it, that I thought coming into it being someone that was, relatively good stats and AI stuff and ML, and like none of these traders knew any of that. I was like, surely there's an edge here. Um, you guys just don't get it. But like over time, I think slowly it chipped away, rather than being like, oh, I think, we can automate this. It's a case of like, is it worth automating this? Like alpha decays. And definitely a small incremental over time thing. And it's also just like, sometimes you got to throw shit at the wall and see if it works. And I did that for the first time in crypto, and it did work. Um, and that made me really question, is like, oh, well, if we're making money because markets aren't efficient, then sometimes you can't assume that the data tells the whole story, and you perhaps need to be a bit more rational about it. So most of the edge went from being in the model to actually feature engineering. So it's thinking about like, what story am I trying to tell here? What edge am I trying to capture? What behavior am I trying to capture? Especially in crypto. Crypto's much less efficient. People aren't using, cap M pricing models to decide whether a crypto is overvalued or undervalued or whatever. They're buying it because it goes up, or selling it because it goes down. Like there's a lot of just like behavioral aspects to it. And so you basically just need to be like, okay, I'm trying to impute from all these different data and signals, what do people think? And so I'm just trying to somewhat at the end of the day, you're trying to predict behavior, and you really can't tell that story with data. So you do have to use a bit of intuition and come up with signals from that, and that direction has led me to more success than just, I guess, data mining and trying to go that way.
I totally agree, and I think the other thing is that numbers can't capture people doing things involuntarily. So, you know, in crypto, people are sometimes forced to do things due to liquidations, due to other things are happening that you're not aware of that you can't capture, and you're like, oh well, I'd never do that, or this is something I would happen, but well, I'd never do that, so why would anyone else? Because it's irrational. But they're not doing it like blasting market orders when there's more efficient ways to transact, or just situations like that. Like, don't look at it from your perspective. Whatever you would do is irrelevant. It's not about you. It's about your counterparty and what they're doing, sort of thing. So,
Definitely, yeah. That's definitely where I think I've ended up. Rather than thinking, oh, I'm right, market's wrong, I've got to try and think of how is the market thinking, and how can I think like them to try and see how they'll react.
and so, you mentioned when you started, I think we sort of covered it, but was there any misconceptions you had early that sort of got taken away? Like maybe you thought, maybe you thought one thing, and then as time went on, maybe to do with even market microstructure, because I know there's a lot of misconceptions. I still have misconceptions about that to this, to this day. So was there any misconceptions you had, or even in recent times with crypto, like as you started your prop shop with your friends, was there anything there that sort of changed over time?
I think over time, I've sort of realized that there's a lot you don't know, right? Um, and so you're making decisions in the face of uncertainty, and there's a lot of research papers and academia stuff you can look at, like make decision making under uncertainty, and that's something I spent a lot of time on previously to trading, and sort of outside of trading, I still have an interest there as far as like reinforcement learning and Monte Carlo methods, etc., etc. But there's a ton you don't know, and like I'll give you an example. Is like you don't know the risk limits or the opinions of the compliance desk at whoever's the most dominant market maker. You don't know why they can't make this trade. They might not be taking the trade not because it's profitable, but because there's another desk at that company that's maxed out risk limits that day, or there's something happening. Like you don't know that. So like there's a lot you don't know that could present opportunity or could also present a pitfall. Um, and I think that's something I've learned more and more, and like my uncertainty bound has grown a lot more over time. Um, Before I used to think, sure, there's stuff I don't know, but like I know enough. I've got all the same metrics that everyone else does, but really you don't. There's so much, like even with, like, let's say, like a naive one that I've learned is like someone's running a hitter strategy. There's a stale offer in the book, and someone's just hit it or lifted it. Sorry, um, and they've lifted it for like a fixed round number amount, right? Let's say it's 100 BTC offer, and this person is like, this is a taking over from tradfi, so like this probably wouldn't, microstructure wouldn't apply so much so in crypto, but let's say it's 100 BTC offer, and this person's lifted for 80. Now, they obviously think that's a good price to trade at. Why didn't they take the remaining 20? It's probably risk limits. It could be many reasons. It could be that they're doing like dynamic sizing on confidence or whatever. But like sometimes you might not be fast enough, but sometimes they're good fish to swim behind. Like there's probably even higher edge swimming, taking the little crumbs or the waves behind the cascades that they cause trading. So, and that, like knowing that, when it's like, oh, if you're on the desk and you're running that strategy by and you're trying to get it through compliance or risk or whatever, you're like, oh, can't we just take more? Like this is like a pretty much guaranteed opportunity. But it's like, no, like there's just a flat out no response. So if you didn't know that that's how trading firms operated, that they'll have like a capped risk limit on trades like that, and you can't send anything more out. And there's reasons for having that capped risk limit, which I'll cover in a second. You'd be like, oh, well, that wasn't some actor taking it. That was just someone else market order hitting it. But like one example is like in high frequency trading is you would do something that we would call multi-shoot, which is like you send the same size order, which would probably be this 80 BTC lift over several different connections. 50, 100 in crypto, maybe in traditional finance because you're co-located, it might be 5 to 10 or something like that. So you've got all orders that could hit. So you've got 10 80 BTC orders that could hit, right? And that's 800 BTC you could be potentially taking. So there's risk there that you might actually fill more than you want to. So you actually cap it quite low, if you can. There's different ways to make sure that when one arrives, the rest cancels, but sometimes that might not happen, or there's all sorts of weird idiosyncrasies. So knowing that, you'd be like, oh, okay, well, I'll lift the remaining 20, or I'll try and figure out when this happens and try and follow them. Or sometimes it's okay to be not the fastest. It's not always a winner takes all. It's a winner takes most scenario with high frequency, low latency trading. So I think being more skeptical of like what I don't know, not just of the edge, can lead to profits and I guess capital preservation too.
I totally agree, and it's funny with the more you're in crypto, I think the more skeptical, or like like a black swan happens every like 3 months. Like USDC, that was like a month ago. They happen all the time. So when I you see these older guys who have been around longer since like 2015, and they're just so jaded. I kind of get it on like a meta level, because they just sort of, this has happened every 3 months for them for like 8 years. So of course they're going to be extremely, they need to see it for themselves, sort of thing.
Yeah, you have to be sort of this mega skeptic to survive. I do think that if you're not this big skeptic or jaded, you've either retired, so you're not trading anymore, um, or you've gone bankrupt and not made it. So
Either way, we're not hearing from you.
yeah,
So there was, I was listening to how you talk about prop and how you did this at a professional capacity, like you did it 5 days a week, or all day, all night. And what advice do you have for retail traders? Because obviously there is, if you don't come out of school doing it, the probability is kind of low, and then as you get older and older, it becomes lower and lower, right? And then obviously, you can't like call up a prop trading firm like, hey, can I spend a week just shadowing you guys and see how you talk about risk? If you were talking to a retail trader to try to, you know, emulate that sort of psychology, or sort of get to think about things like that, how would you advise them to do that?
no, I there's a lot of ways I think people should. Firstly, I think people should ease in, even if you have the capital to deploy as retail. Don't until you know what you're doing. Like test the waters and take your time. Like a year in crypto will teach you a lot. And let's say for some reason you have $1 million in the bank before you've entered crypto, um, and you've done a month of reading and researching about quant trading. Suddenly you're like, okay, I'm going to deploy half of this and get an algo going. I would say don't ease in. Start with 10K less. You'll learn so much having a strategy. You'll learn so much just having a strategy going, even if it's on like money that doesn't matter, like $100. Like if you've just got some idea of a strategy or something, run it for 2 weeks, 3 weeks with $100. Um, the nice nature of most crypto centralized exchanges probably wouldn't work on chain for gas, but is that it's all fee. There's no flat fees. It's all basis points. So if it makes money, you'll be able to see. You'll be able to see, oh, okay, well, it does make money at $100. Maybe I'll put a bit more into it. But what you'll learn along the way of, this exchange is a bit funky and I get a lot of latency when certain things happen and I actually can't put this trade on, or like I can't trade at these prices, or all these different things. Like you learn so much by doing, that my recommendation would be start as early as you can, but start small, and be systematic first. Don't try and be discretionary. Like, don't bother. If you think you can be discretionary as someone who's not spent time in the markets, and you come to me and you're like, oh, but this guy did it. Sure, but like also this guy won the lottery. Like someone was lucky. You probably won't be. So luck is probably like a massive factor in any case. You're here, you've got money that you can invest in crypto. That's lucky. But um, I would say be skeptical, get to market, and try and be systematic. You might not know how to code, but surely you can figure out Excel. Surely you can figure out TradingView. Like, do something systematic and have a plan and just execute on it, and you'll learn a lot. Um, that's probably what I would recommend. And ask questions of other people. Like, if you come to me, let's say on Twitter DMs, and you're like, "Hey, bro, I'm trying to trade. Like, how should I do it? Like, what should I do to learn about market making?" Probably not going to answer or give you anything useful. But if you come to me and be like, "Hey, I've got this Python market making bot that I've been running. Occasionally, I get adverse selected in an event like XYZ. You got any advice?" Way more likely, and more other people are way more likely to probably give you advice because you've put some effort in and you actually be able to action it. Yeah, that's probably my advice for retail is actually just be systematic. You'll build up intuition that way and then use that to guide you into new strategies, whether that is relative value trading or slight discretionary or whatever. You'll learn and pick up little inefficiencies in the market, little idiosyncrasies of the exchanges, things along the way you'll spot that you wouldn't have spotted if you just went balls to the wall straight away.
Well, you wouldn't last.
Yeah,
There wouldn't be any money to probably. I mean, obviously there's going to be that one guy, but it's funny because I totally agree. And the more I'm involved with markets, the more systematic, and I think that's really the way to start. And I kind of get the mindset of someone just starting though, because they probably think, oh well, it's just all numbers, and maybe they don't want to face the fact that if they have a strategy, it's bullshit. Like buying a breakout, or like, why do you think what is a breakout? Like, what is even you know what I mean? It's just, yeah, they probably don't want to face that, because I used to try to do discretionary stuff. When I first tried in like 2016, it was just like so dumb. And then I'd read things being like, "Oh, you need to do this," and that's not applicable to me. But the second I started getting more systematic, with my first arb that I was doing in 2021, 2022, it was total. I didn't even have to think. I was just a monkey executing. So I completely agree with that.
yeah. If you're starting with low or very little money and you're mathematically inclined and willing to put in a bit of effort to maybe write some code or augment your like writing Python, I would say everyone in that wants to trade should be doing. If you don't, well, then you're probably going to get picked off by one of us who can. Um, I I think the best strategy, like you just mentioned, arbitrage, to like try and gun for is arbitrage, right? Like if you don't have capital, it's hard to make more money doing something like slightly positional or momentum or mean reversion or whatever. Like if you've got 10K, you might make another 10K, but that's not going to change the world. But if you can maybe augment your skills for finding an arbitrage bit, looking on chain off like centralized to decentralized, or some kind of weird protocol that just launched. Like maybe you've got a script that just looks for large increases in TVL from an empty contract or something like that, and you go, oh, doesn't look like anyone else is arbing this yet. I'll just sit here and click it, and do the trade. That's probably the best place to be looking. Is look for these arbitrages. If you don't have the money, then maybe once you've got some capital, think about diversifying a bit. But arbitrages are the best thing to be looking for, especially in crypto where there's liquidity is fragmented everywhere. There's still a ton available. There's a ton that like you or me probably wouldn't bother taking because they're not worth the money. But like there's easy $100 in a bunch of different places right now. So if you do a few of them a week, you're $100 a week. There's pretty decent money on the side. Occasionally there might be a tail event and there's like $2,000 on the table instead, and stuff like that.
It's so true. And just to just to reinforce what Liquidity Goblin's saying, if you're listening to this and you think, oh no, that can't be true, because if it was true, someone would have already found it. Don't even bother. Like, don't even come to, don't even fire up the screens, because it's that it had, I just speak to people like, oh, well, the markets are efficient, so that can't be true. And it's like, if you play that forward, there would be no traders. What do you think they're doing at all these places? Yeah, I completely agree. And with the small capital, there's so many things that I see on Twitter and stuff, how I'm like, I really should be doing more of that, but it's just so much effort for such a, I don't want to say trivial, because it's not, but it's not enough cash to really get me excited. You know what I mean? So when airdrops happen and all this sort of stuff, it's like, oh yeah, make, I don't know, like 10, 20 grand,
Yeah,
it's like, it depends how much time it takes. If it's a day, like, yeah, I'll do that. That's a good return, right? But so usually it feels like there's a fair bit of work, and it's only for like a few grand. So it's like, small account, that's definitely worth a look at. There was another question I had here, how, when you started off, was there any like war stories or any experience on the desk that really left an imprint on you?
yeah. I guess uh, sort of like a secondary story, but it's just from a story of a guy I used to share an office with. He wasn't on my desk; he was on an energy desk, and he used to work at Citadel in the 2000s, doing their energy trading. I think probably from London or something like that. Um, and he told me about this interaction he had with Ken Griffin, who, if you don't know, is the founder and chairman or CEO of Citadel. Spooky looking guy. I think I have him as my banner photo. He's known for this like deathly stare he has, where he just sort of looks through you. Um, but he told me about this encounter where he was working on the desk as a junior, and Ken Griffin would come in and like oversee, like he'd fly in from New York and he'd see what they're up to, um, and he'd do that for all desks apparently. And he was looking over this guy's shoulder for maybe 15 minutes, like watching him work. And then he asked him, he's like, "What are you doing that will make the desk money today? Not tomorrow, not next week, not next month, today. What are you doing to make us money today?" And obviously he stumbled on that, and he was just trying to justify why he was doing this quant work as a junior or whatever. And he said, if you're keen to stick around, do what's best to make money today. And he left it with him. This is like, I guess, paraphrase. I'm trying to remember exactly what he said, but along those lines. And at the time I was like, oh, what an idiot, this Ken Griffin guy. And like, there's obviously like Citadel doesn't do everything perfectly, but at the time I was like, oh, well, that's just old fashioned way of doing things. Of like, that's a bit of like a overly greedy optimization of how you approach work, of only chasing what's in front of you and not sort of smoothing that out and seeing the longer game, and writing code so that you can take things. But I think over time I've come to realize that that is probably the best mindset in trading, because you're sort of chasing a carrot on a stick, and as you make changes, the market changes and the edge changes and things move away from you. And over optimizing for some kind of end game or some like nice polished system is probably like, you'll just waste time, because by the time you finished it, the dynamics have changed, or like everything's changed so much that you need to start again. And I think what I've taken away from that is the most important thing is to be looking at what's the smallest possible leap you can do at any point in time for like the most robust improvement in edge. So like, what can I do today that might improve my edge 20 bips? And it compounds over time. And it gives you more flexibility, allows you to be a bit more agile. You can change, you can improve with the market, rather than having a side project on the side taking 8 months to get ready to execute on this new market, and then there's like 8 months of trading you've missed where it's most inefficient and you don't even need to be automated. You could just click trade it twice a day or something like that. I think time to market and taking the smallest leap possible and being iterative is probably the biggest things I took away from that. Is like, you need to make the smallest leap. Don't think about implementing, this new research paper. Just, oh, currently you're using this linear regression with these weights. Oh, maybe we could start doing this linear regression online instead of, running it once a week and getting these values that I get from my betas. Tiny, tiny like change comparatively, but way more edge. So it's like, what's the point of chasing these like I guess, red herrings of what you think could be edge when there is edge that you're pretty like almost certain is available right in front of you. That
Yeah, I completely agree, and I think our mutual friend Robot James, he made a post about a Twitter post, something along the lines of, he never trusts a guy with like a really sexy dashboard and all this stuff, because that doesn't make you any money. It doesn't, like, I mean, yeah, you need to manage your risk appropriately, obviously, I'm not saying that, but it should just be like the most simple thing ever, because you should be focusing on what you can do right now at this very second that can make money. um I completely agree. And every time I've sort of had more capital that wasn't deployed in risk premium strategies, or whenever I get like the boot up the arse and I'm like, I've got to find some new strategies or some new ways, and they're always the same variation, but they're out there. They're out there right now, like at this very second. So, and going into new ecosystems as well, because they can be neglected just because there's opportunities there that people just haven't gone and had a look yet, or maybe they have gone but they haven't got enough capital, so they're like that they're still there. Whereas maybe on Ethereum or something, they're a bit more fleshed out because people have had time to go through and they've got like alerts and stuff. But maybe on like a new exchange or a new layer one, people are a bit more skeptical, so they're not going to be so quick to deploy capital, which you should be as well. Obviously, you can't just be like shooting off into every new protocol you see. Um, so just speaking of how you mentioned with strategies, are there any strategies that you think maybe for less capitalized players or newer people to that they should be, that maybe isn't worth your time, or it's too little amount of capital to deploy on, or is there anything like that that you see where that maybe someone listening could give them a bit of a hint of inspiration, or give them a sort of window into how you think about strategies, and some that you think are probably not being pursued as aggressively as if maybe you were starting off and you only had 10 grand, 50 grand, 100 grand, or whatever, something like that?
pursue strategies where the effort, the perceived effort, like sometimes and quite often, other professional traders are wrong about the amount of effort involved to take a certain trade. And I've seen that before. There's trades that I was like, oh, that looks like good, but it's like, oh, I've got to like get a new wallet, go on that chain or whatever. But it's like realistically, it's probably 5-10 minutes of work, or like probably a lot less than you think um, to do it. But it's just like this impetus of something new. Like let's say it's not an EVM chain or something, like, or I've got to, let's say it's on some parachain system, so I've got to go like 3 bridge hops or whatever to get my funds there, and there's some like lockup time to get it back, and I'm like, oh, it's just too much effort. But then it ends up being, if I did take that initial trade that maybe it was like a $2,000 arb or something, I would have been set up for it, and then a week later it ends up going off, and it could have been like a few $100,000 opportunity. Which is the nice thing about arbitrage, is like you might be collecting pennies day to day, but like someday FTX might implode and prices just are out of line everywhere, and you can make shit ton of money. I think the things to look out for are like probably the things that I would be like, oh, there's too much of an impetus for me to invest capital in this. So it's like no one would want to put big capital in. One of them might be, oh, I'm moving to this new L1. It doesn't have perps. So it's like this shitty L1. I can't hedge the money I'm investing into it. It could tank. I could get rugged. But if you're only investing $100 or $200, probably some pretty good opportunities to make $400 there. But I'm not going to put 10 grand there because it's probably going to turn into 1 grand. Things like that, or like bridge risk. Like let's say an example is Arbitrum. If you're moving any significant amount of money, obviously there's some fast bridges, but they incur costs, slippage, and there's only certain tokens available on those bridges. It's like 10-15 minutes to get from mainnet, Ethereum mainnet, down to Arbitrum, but it's 7 to 8 days to get back on bridge tokens. So like I'm not going to bother locking up $1,000 for 7 days to make $400. Just too much involved. 7-day lockup, I'll be like, oh, not worth it. But if you've only got $1,000, making 40% return on all your capital on a like pretty much certain trade is a fucking great trade. If I could have done that with 100 grand and turn it to 140 grand, if the liquidity was there, I probably would have put the trade on. Or I'd go grappling around looking for like dirty hedges or whatever. So look for ways where you'd be like, oh, this definitely couldn't scale. If you look at a strategy, look at strategies that can't scale or would be very hard to justify scaling, and target them, and then target breadth. So if you've suddenly got a way of arbitraging things across a bridge that locks up for 7 days, and you've got this one token you found that trades in 2 different places, and you've got capital on both sides for whatever, and you're arbing it that way, you can then be like, okay, well now let's try and find as many tokens as possible to add that I'm watching. Most of the time, you probably don't have an arb on any of them, but then the one day where there's some whales dumped on one side, there might be like 40% arb on it, and you're set up, you can take it.
It's so funny how you say being set up, and that is so important because the last thing you want to be doing, sending money to a new protocol and a new exchange and a new layer one or whatever. I don't know how it is for you, but for me, it's always stressful and it's always kind of intimidating because it's like, oh, did I bridge this properly? Did I do this? Did I do that? And it's always a bit stressful. And you don't want to be seeing an opportunity and being like, oh, I'm going to jump on this. And then, I mean, maybe for some people they can, but like, I've found that when I'm set up on things, when it happens, I'm just ready to pounce, But if you're rushing to do things as it's happening, it just makes it so much harder because you're trying to think about the trade, you're thinking about making money, you're trying to think about that, but then you also have to think about getting set up. And getting set up should be, it's kind of stressful within itself, and it takes time. And it's like, oh, I just want to get this trade done. So maybe you get sloppy or you make a mistake. And it's funny how you said time lock in crypto, and it always fascinates me. I've toyed with like making a sort of dashboard or something, or a Excel spreadsheet where it tracks the liquidity across some tokens, because some things get time locked and you annualize it and it's just astonishing. And I think maybe there could be a way to look at that and gauge stress in the crypto markets. Like maybe if you look at the steth, well, that can be redeemed now, so that wouldn't work anymore. But just other things where they get locked and it takes 7 days to redeem, or it takes a month to redeem. But when there's a sell-off, people obviously sell these assets, right? Like anything staked, it takes 30 days to unwind, for example. So I just think that's kind of interesting because maybe when those reach certain levels of sell-off, it's like they're so dislocated. That's when people are like super desperate for capital. I love those trades as well because they're so simple and it's just so hard to stuff them up. You just buy, wait until you hedge it if you can, if not, dirty hedge, and then collect the money. I mean, yeah, I'll take as many of those as I can. That I was going to say as well, for newer traders, and just, is there anything you see on Twitter that you just think people might be taking, they might be sort of getting like smoke blown up their ass, or maybe people are just sort of leading them astray? I mean, obviously we could write a whole book about like technical analysis and how that's all psyops to grift people and stuff like that, to an extent, not always. Don't, if you're a technical analysis like person, don't like abuse me or whatever, but a lot of it is bullshit. Come on. So is there anything with that you sort of think that maybe people should be aware of, or just things you see people falling for?
Yeah, I'm not going to mention any specific tweets or specific names, but there are people out there that are LARPing, and there are people out there that are psyoping you. Like they're intentionally out there to try and throw you off the trail if they're on edge. So I think, some of it is going to come back to, you should be skeptical. Like, why are people sharing with you a profitable strategy? Why don't they just put money into it? That's like the biggest one, right? Why are people giving you the keys to compete with them if they are actually doing what they say they're doing? So when you read things on Twitter, I recommend be skeptical. Sometimes I might share a profitable strategy I can't do. Sometimes it's for clout. Sometimes it actually would benefit me. If someone was harvesting the risk premium in a certain market that I might be market making or whatever, that might make my life a bit easier, and it might mean that someone's taking on the risk that I don't want to take on. So I think a lot of the time I see people overdoing it, or trying to get things too polished before going into it, or just like thinking of weird esoteric ways to do things, like Kalman filters. Sure, they might work in certain scenarios. Obviously they assume a normal distribution, so lower frequency, or if you're using them in areas where you're doing a relative value between assets with the exact same underlying or whatever, and you like, okay, they should revert like the basis on a future or something, maybe. But I don't think you should ever use a Kalman filter, personally. That's one thing. Too complicated. Don't bother. It's crypto. I think the point is the market's so inefficient. You should be trying something simple first and then making it slightly better as you need to make it take more trades, take more edge, whatever. Like, if you're trying to go straight in and you're using like some kind of machine learning model and you actually don't have a strategy in market yet, you're just destined to fail. Like, if you're putting a strategy in the market, I would 100% recommend you, if you're trying to do quantitative, like medium to high frequency stuff, or let's say it's momentum, just get something up that trades like moving average crossovers or something on like minute, secondly, whatever. Write the code, get it in, and see where it fails. Obviously, don't commit too much money to it, or even just paper trade it, but see if it makes money, see if where it doesn't make money, and then try and ask yourself why. Like, why is this not making money? Sometimes it might be because it's a stupid strategy. Sometimes it might be because it's a stupid signal. Sometimes it might be because you just can't execute. Like, maybe it's a really weak signal and you need to be a market maker or be able to passively take the order, and you don't have the infrastructure to take that. But I think trying to jump to the end game, or even thinking that there is an end game, is the biggest misconception I see on like systematic quant trading Twitter. It's the biggest. If you don't have anything in prod, don't even think about doing anything complicated or reading any of these Twitter threads that are like, here's how you can use advanced portfolio theory to do some convex optimization to rebalance your strategy. If you don't have something that's like a Bollinger Bands pair trade or something like that already running in an automated capacity, you shouldn't even bother looking any further. Do it incrementally. Just do the smallest leap first. Get some strategy that's not stupid in production running. Might just be a for loop, right? Like, this every minute it gets a new candle from Binance, and it's like, okay, I've got the last 100 prices. Let's look at the momentum here. Okay, I've got a threshold on momentum that I've done a quick back test on in a Jupyter notebook, and I think it's relatively sensible. It seems positive expected value. I'm going to put some money into it. Maybe you extract your edge through position sizing rather than through refining your signal. Sometimes you can be super confident. Maybe that's how you do it. But like, anyone that's sort of like spruiking all these fancy machine learning, if you hear neural net, it's immediate BS.
Well, I suppose you know firsthand because that was your degree, wasn't it? So, like, if anyone was like, if there was a way to make money, but then again, if you were making money using it, you would tell people that it's BS. So, just joking.
Like, I'm not going to say there are people using machine learning to make money in the markets, right? Like, there are people using neural nets, but those people are people like XTX Markets with a team of PhDs and 10,000 GPUs, right? Like,
I couldn't agree more. And it's like, there are ways, but however, there are easier ways, and that should always be. Well, I don't know. I'm lazy, and like sometimes I get trade ideas in my DMs because I just encourage it. I like reading. I like hearing what people have to say, and then it's like super complicated. I'm like, man, this is hard. Like this, and I don't know. It sounds like BS, So I like simple things usually do work the best, and yeah, I completely agree. There's easier ways to make money than some complicated way, and my strategies reflect that. Like, I want to have the dumbest strategies I can because they're the hardest to screw up, and I'm always short my capabilities and long simplicity.
yeah, I agree. I think I tweeted about this not too long ago of like, why are you looking at complex execution algorithms when you're trying to work a $10,000 order into the BTC book? Like, you're like, it doesn't matter. Like, half of it just doesn't matter. Just make the trade. Just focus on other things. Like, yeah, I think when you're trading with small-ish money and you're not like a large portion of the market, like half of like majority of the research or anything you're going to read on that like execution algorithms or whatever aren't going to matter at all. Those papers that you read are for like banks that are selling execution algos. Like, all the best stuff, if it's complicated, isn't out there. Like, you won't read it because it makes money, so there's no incentive to share it. And if it does make money, it's probably, and it is out there, it's probably not complicated. So I think it's just, yeah.
I feel like a lot of it is mental masturbation as well, where people sort of want to feel. I mean, I'm guilty of this. Like, we all are to an extent, I'm sure. But it's like they want to feel like they're working by reading something, but it just really isn't super applicable. And that time can be better spent elsewhere. But if you're doing it for pleasure, like, look, if you're researching a topic like finance, or trading, there are some things which actually can take away from you. Like, I have zero doubt. Well, yeah, I basically have zero doubt. There are some things you can read which will regress your understanding of the markets because it's just complete nonsense. But most things, if someone's trying to shill you like some coin and they're like, the only way to make money in crypto is looking for like 100-to-1 trades, like, that I just I just fundamentally disagree because the odds of you
Yeah,
picking that is so unlikely. So you might as well just focus on another strategy, which, you know what I mean, day in day out, sort of chips along and makes money.
yeah. I think also the best thing you can do, like with your time, like if we're talking, there's two things. If you just are interested in the maths, which earlier in my career I was like, obviously money's nice, but like I was genuinely there for the tech, kind of like I really just really enjoyed it. So there's no shame in just doing it because you enjoy it, but just know that it probably won't make you any money. The best thing you could probably do if you want to spend your time for most people is probably not to do any trading. As sad as it is, just spend more time, furthering your career, getting a better job. Uh, like unless you're making like significant money, you know what you're doing, and you've got like at least 12 2 months runway in the bank. You probably shouldn't quit your day job to do trading either. Like don't
I,
like
I completely agree, and I get people messaging me all the time because I sort of did teach myself to trade and stuff like that. So I get people messaging me being like, "How did you do it? Have you got any advice?" and all this. And it is such a full. I mean, it's such a full on job, and 99.9% of people who try will fail just by virtue, like all those people in 2021 in the bull market. you know I would be surprised if, I mean, I think Inversebra, that guy from the guy from Twitter, his engagement, I think he posted last year, his engagement's down like 50% or something, because those people were engaged in crypto and they're not anymore. Like, those people are gone, sort of thing. So I completely agree. There's another thing I wanted to ask here as well. So you went from working in prop where you'd be in at, I don't know, 6 in the morning or whatever. You'd stay back. You'd have like you get lunch at 12, sort of thing. Your day was very structured, and now I mean, obviously you still have a company and stuff. You do have, you're not just like some nomad trader like myself, but you obviously have a lot more discretion in how you can spend your day. So as a someone who does this at a professional capacity, but with less restrictions on your time, how do you structure your day to get the most out of it, or how do you want it to be, and then how is it really, I guess?
yeah. Obviously there's ideals. Like I wish I was a bit more structured. But there's no one here to tell me otherwise. So sometimes you just sort of, instead of ending the day at 10 and getting a good night's sleep, you end up going till like 1 or 2 a.m. and then you sleep in and your like sleep schedule gets fucked and you now all of a sudden waking at 10 or 11 o'clock. Um, so there's that. I'm definitely very guilty of that. And I, to anyone that's, I guess, listening, I don't recommend doing that. The things that I think are important to keep in check whilst you're trading, not just for your like trading, but general health. Like if you're not performing, your trades you won't be able to like perform in your trades. You won't be able to think properly. So eat properly, sleep properly, exercise, and go outside, touch some grass regularly. Um, that's an important part of your day. So like how I wish I structured my day and how like I used to structure it when I was employed as a trader rather than sort of self-employed as I guess I am now. Um, is I'd wake up, I'd go for a run. Initially, when I first started, I was on Asian market, so I had quite a late start for like about 10 o'clock in the day, which was nice. Usually, I try to get in at 8 or 9 regardless, but I'd go for like a run as often as possible. Sometimes it's like 4 or 5K. I'd get into the office. Luckily, breakfast was sorted at the office, so I'd eat there. Um, and then I would go through the news. So like we used to do like a news briefing when I was on options, like every morning. Um, and I think that's massively valuable. Just keeping your finger on the pulse of the market of like what everyone else is looking at, because everyone looks at the news. Sometimes it's not irrelevant, and sometimes it's wrong, and you know that. But other people are looking at it and they're using it to inform how they trade or what they're doing. Especially in vol, you've got events and stuff, and you've got to try and think how people are thinking about like FOMC meetings and whatnot. And so read the news, compile it, go have a meeting. Everyone would try and bring their own little angle or whatever and have a discussion, make some predictions on where we thought maybe a certain figure was going, maybe it'd be CPI, or we'd come up with some, I guess, scoring or whatever metric, and then log it down, save it, have a calendar of news and what you thought of it at the time, which could be incredibly valuable if you're, young quant. You've got all this information of what people thought about the decisions at the time, and what news was going on, but also just like what people thought about it on the desk and general consensus is like super useful. And then you go do sort of like your daily tasks to get ready for market open, which is a nice thing, like markets shut in real tradfi world rather than cryptos, just 24/7. Emails, scripts, set parameters, whatever, and then market opens. Quite a busy period. Make sure things don't break, and whatever happens over the open, things quiet off. On the side, you're probably doing some Jupyter work, further research, keeping your eye on things. A long rolls lunch or maybe an auction, and there's things to be doing in terms of changing parameters, like hands-on things. But most of the day, it's like tending to the algorithms, setting reasonable parameters, doing on-the-fly analysis, and then you've always got like a project on the back burner, which is like maybe something a bit longer term, like an improvement to some form of pricing model or something that you do when there's nothing else to do. So it's always good to just have something on the side for when you've got nothing else to do. Market's quiet. There's often, I often see people say, "Oh, it's either going to go up or it's going to go down." But having traded professionally, that's wrong. There's plenty of times where the market does nothing and just goes sideways, and it's boring. So having something to do in those times is probably important. And then market will close. There's a bunch of like stuff you got to do for a daily wrap, like what trades you made, how much money you'd make. Something I definitely recommend. And then you maybe do some post-trade analysis, run some analytics, send off some data jobs or whatever, go home, eat, sleep, do it all again the next day. So that's an idea of like what I was doing in TradFi. What I do now is much more like I wake up. Sometimes I look at the news. I have alerts for like DB, tier 10K on Twitter and a few different TweetDeck stuff, but news doesn't really impact the stuff I do now. It's mostly just algos. So like my day-to-day mainly is just writing code, occasionally logging into different like AWS instances and stuff, or reading a new change to some open source code base we use or something like that. But what I do wish I was more, the sort of like implicit structure of the TradFi markets like sort of forced me to have my finger on the pulse of the market a bit more, even though it probably didn't impact my day to day. I'd probably recommend that as having some kind of structure of like, okay, my day starts here. I look at the news, I make my notes on the news, and at the end of the day, I do a wrap and write a wrap. I think those two sort of like bookends to your day are super valuable. And that's how I would suggest structuring your day. And that's sort of what I try to do, but doesn't always come off that way.
It's so hard when you're a full-time trader for yourself as well, because there is no start and stop. And, you have to love it, obviously. I mean, I don't care what anyone says. Like, you have to sort of love it to do this. So, of course, you can easily spend 16 hours a day at the desk, So, with TradFi, you sort of do get that cut off. So, I've tried to implement no computer past 9 p.m. So, at 9 p.m., I just get off and I lay down and read, or I hang out with my girlfriend, or I do something else. But, it's hard because when things are happening, and especially if you're kind of flow dependent, you don't want to be away from your desk. So I completely agree. And with the Twitter, and getting your news flow, I completely agree. And if you're trading, even if you're trading professionally, if you're new or whatever, I really recommend like creating being on Twitter and trying to find people who do similar stuff to you. And like, obviously your goal is to make friends, right? And then from there, start Discord groups, start Telegrams and stuff like that, because it's literally like having a virtual office. Liquidity Goblin and I are in a few together, and it's just so good because you're all, like, if people are if you're in a group full of people you respect and you know they're smart and you know they're trading sides and you know they're the real deal and they're going to be talking about things that you probably should be paying attention to. Like the week FTX went under, which is etched in my brain forever. It was just buzzing every day. The week before, people were talking about it. The week of, people were talking about it. You know, when it went under, it was like it just, and having that there makes it a lot easier to stay on top of things, because it's kind of like having a market surveillance team, I guess, but they're your mates. so so it's sort of, you know, everyone's just talking, so you just I get a lot out of it. So I just, if you're just do anything you can to make friends, and then especially if they're full-time trading, it's a bit difficult if they're doing it part-time because they won't always be in front of the screens. But if they're doing it full-time, then there's definitely a capacity there to speed up your learning curve, because you discuss strategies, and on top of that, you're all going to be watching the same things. So
Yeah, I 100% agree. I think the biggest value that I've personally found in sort of, making sure that you've got some kind of news feed open, or Twitter, or at least a chat where you've got other people that you know are like rational, sensible, profitable traders that are making moves or have opinions that are, is not even just for making money, but even just to be defensive. I think probably for someone that's mostly doing stuff that's algorithmic, the defensive aspect is the biggest one. You know, if people, sure, there's the rumor mill, and coming into FTX, we all know how you felt about it, but sometimes it's good to get a sense check on a certain systemic risk or positioning or news that you've heard, because crypto is like that. Like, it's just like a all girls high school. It's just like everyone gossips, and there's just rumors that go around, and sometimes they're true, sometimes they're not. Most of the time it doesn't matter, and they still move the market. So it's like, it's pretty important to have your finger on the pulse of like what's going on, or someone might have some news that like this is a dodgy protocol, or like you need to, capital preservation is probably equally as important as finding edge, especially when you've been in it for a bit. um,
and you're just not going to get that on TweetDeck. You know, if you have your TweetDeck open, you have all your little. I have my things split up where it's like traders, news, and influential people, and so, you know, that's not going to tell me. You know what I mean? That can't. The way I have it set up, it doesn't have like speculative things like that. That's going to be in the group chat, but it's so true, and you know, it's so funny because when the global financial crisis or things happen in the past, you hear about people like this talking about it, and all these other rumors start happening. And I don't know about you, but when I would used to hear, I'd be like, how could people think that was going to happen? That's so absurd, you know. But when you're in the heart of the storm or the eye of the storm, and things happen that you just didn't think were possible, anything becomes possible. So like, you know, it's just, I can't even think of any on the fly. But I remember when FTX went under, it was like, oh my god, something we all just, I mean, 99% of people, like 90% of people, the vast majority, well over 50% of people assumed FTX was solid, right? So when it went under, it was like such a bedrock assumption, and everyone's decision making framework had just been totally rugged. So that opened the door for everything else to be questioned. And I just remember like the rumor mill was working overtime with just like, oh, you remember, it was just like, it was just so much fake. It was, yeah, it was just insane. That's what I remember about it. Like when one thing turns out to be false that was really assumed to be true, you know, all bets are off. Like everything's going to be questioned. Whatever you assumed was true, it's going to come under speculation. You know, I think like Binance suffered it in December. Like Binance was like, oh, Binance is insolvent next, and then Bybit, and then OKX, and then you know, KuCoin, and everyone else, um, everything copped it. So yeah, it's just crazy how that happens so quickly.
yeah, I sometimes you can be right, and it's that age old saying, like, was it the market can stay wrong for longer than you can stay solvent. um is so true in crypto. Like, you have completely irrational moves, or like people buying BTC on certain rumors that's like, even you shouldn't be long on that news, sort of thing. So it's like, you can spot these inefficiencies, but sometimes it's about just like dodging the falling knives rather than trying to catch them. um,
My favorite thing someone said was when all these like liquidity runs were happening, and you know, just like one thing after another, and just like, you know, everything's going off, and someone commented, it's better to cause a liquidity crisis than be a victim of one. or
Yeah.
something, or it's better to yeah, cause it from pulling your money out. And I just thought like, better safe than sorry, or like it's not panicking if you're the first out, or just all these little sayings, and it's like,
Yep.
yeah, if you do. I always just think it's better to shoot first with this stuff. Like, save your money, get your money into your bank account, and then ask questions. Like, okay, now I'm safe. And then if it kicks off, you're so rational about it. Like USDC was a perfect example. I think, from my understanding, I'm pretty sure you were relatively unscathed. I was relatively unscathed. So when we were watching it, it was like dispassionate. This cannot be happening. It was like, okay, this is a situation. They're down. It's a question of how much. It's probably 8% because of what they released. You know what I mean? So
Yeah.
that made it a lot easier to make decisions. Whereas, do you remember that? I think about this all the time. Do you remember that guy who panic sold when it $2 million USDC when it was below 90 cents through CyberSwap and got like $10,000 of USDT? Do you remember that?
Yeah, I do. I do. I remember him sending the message, and they're like, "Oh, we can't do anything," and it's just grim.
I think about that guy all the time. If you're listening to this, I'm sorry. Like, like I just, yeah. So if you're in a position of power in those things, and those rumors were swelling well before, like they were around days before. So staying up in our group chats, people were talking about it. So if you're in a situation, if you prepare for it, if it doesn't happen, who cares? You were prepared anyways. It's good risk management. It's good to run those exercises and those drills. But if it happens, you're going to be in such a position of power that you can come in and just you can do nothing as well. You can do nothing, but you're in a position just to run in there and just like, you know, make some money. You know what I mean?
Yeah. For example, like I had spent that Saturday sending all sorts of messages and making all sorts of calls. I was like running around like a bit of a madman. I was like, surely not. Like why is it trading under 90 cents? Like, someone knows something I don't, was the question I kept asking. Like, I was like, the more it moved away, the more skeptical I was. But then once I got a clarity of the picture, and I sort of did some rough looking at it and spoke to some people. I mean, this is rude, but I spoke to some people who I would probably want to counter trade on their opinion on what they did.
Well, that's why you were asking me. You were calling me. No, I'm joking. Go on, yeah, go on.
You know what I mean? I tried to get a sense check on what like retail were trying to feel like, people that don't watch the markets. But if you're like, if you've made it out of the 2021 bull run and you've got stables and you sat on it and you're like, USDC is safe. You know what I mean? You've missed that falling knife. And then all of a sudden you've not been looking at crypto because you've just got stables and you don't have to think about it. Someone sends you a message, it's like you looked at the USDC depeg, right? And you've had like 10x your account and you've sat on the stables and it's like at 10%. And you've seen what happened to Terra and UST, and they're like, they don't know anything else because they've not had their finger on the pulse. They just go, fuck, I just want dollars.
Why risk it?
Yeah. So I can kind of see where they came from. It's like 10% to some people is, 10% is better than 0%. But also it's like, it was like, if you ran the numbers, is worst case 8% loss.
The argument was that, and I remember seeing it on Twitter, and obviously you and I faded this sentiment. Like, we did it. I know we did all right. And but they were saying, well, if FTX was BS, who's to say this isn't? And like, and people were, and it's all, and people were saying, oh well, with Terra Luna, they said the same thing, and Terra Luna and USDC, it's chalk and cheese. Like, it's so
Yeah.
they're not even in the same postcode. Like, they're not in the same city. They're so different.
But
For
yeah,
also, like, I'm not even going to argue. Like, they're totally different, right? Like, USDT or UST had Luna. This had treasuries, like the US government. I mean, they're just not even in the same ballpark, right? And then when they released saying, "Oh, we're 8%," I think we did the maths on the back of the envelope, and it's like they were 8% below par. And this was before Yellen came in and bailed everyone out. And it was like, so 92 is fair price. So so at this stage, I think it was like 87, say 89. I think it touched 82 at one point on some exchanges, but just say it's like 90. You could buy it at 90 and be relatively sure you could make that 2 cents. And then even if you bought it at 92, like, that's the floor.
yeah.
So, but people were just like, I just remember seeing all this stuff and it was like, that's what they said about FTX. That's what they said about this. And it's like, this, I get it. I get why, if you weren't so involved, you could make that analogy and be like, oh, well, this is that similar. but I don't know. And the other thing as well was it was such a lucrative business that I thought that it could just get sold. And I think we were both talking about that, how with USDC they made like hundreds of millions of dollars a year just in interest. It's like the best business in the world. They would give you fake internet money, essentially, take your dollars, use those dollars to buy short dated treasuries, like 3 month, you know what I mean? Like treasuries that would do very soon. I mean, it's like the best business in the world. So I was also thinking if it doesn't, if the peg, they lose that 8%, that 8%'s gone, there's a good chance that whoever acquires this business will just pay it out because it's so lucrative, you know?
Yeah,
That was
it's
my thought process anyway.
yeah. If you looked at the gap, like how many, it was only a few $1 billion. Like if you say, okay, USDC is now insolvent, and you could have bought the whole operation for $4 billion on something that prints at five, when you're getting 5%, like billions a year on what it's holding, uh, it's like a no-brainer. Not only that, but it's like the assumption that you get 0% on a bank that's just gone under because of a bank run, not because of, like I was trying to talk to my friends that are in traditional finance, and I was like, because I don't, there's a whole array of like minutia and like nuance to these things. I was like, what I was talking to a friend who works at like large government banking overseas, and he was like, the odds of getting $0 back on any deposits are quite slim. They're not zero, but like the recovery is almost guaranteed to be some portion, right? Like if the government, if it's going to be zero, the implications of that are huge. So the government's going to at least try and get them some money back, and all the people that deposit there are quite influential. Not only that, but there was like every consulting firm under the sun was doing, or IB was doing pricing to try and figure out like what's an effective price to buy out SVB and whatnot. Like there was money interest there. Like this, a lot of people saw this as an opportunity to scoop up some kind of bank cheap or whatever. And so I was like, okay, 92 is the floor price if it's zero. I'm almost certain that it's going to be 50%. Like that, my theoretical value was 96 cents or something. And so when it was below 90, I was like, fuck it, just max bid. And the nice thing about these strategies or like this opportunity is that you could scale it with quite a lot of capital. And so I did, and it was a good opportunity. And so it's like, and that was only because I was excessively skeptical, I think, that I had the confidence to go into that trade.
And I completely forgot about that. You're right, because I can't remember who it was. I don't think it was Kenny G. I can't remember who it was, but someone was saying they would buy deposits for 70 cents on the dollar. I can't remember who it was. It was someone important. I can't remember who, but someone said they would buy they would buy deposits at SVB for 70 cents on the dollar. So like, you know, and that they're not buying 100,000, you know, they're bid like with size, right? So you can't discount that. If they're saying that, then there must be. Yeah, I completely agree. And then by the time I remember, all these people were like, when Tuesday rolled around, and I think you and I were like pretty happy, and most people who took that trade were super happy. And then someone said on my timeline like, "Oh yeah, if you took this trade, that was so dumb because." The USDC depeg happened, and then Yellen said she was going to bail it out. So the fair value was actually 1. So it went from 92 or whatever to basically, like you thought, 96 to 1, right? So it rallied up. And then CZ said he was worried about BUSD, so he was going to like TWAP into BNB, Bitcoin and ETH over the course of the next like whatever period of time, like I think a month or whatever. He said he was just going to be bid and he was going to convert that over. And then a few days later, when Bitcoin was up like 20-30%, someone was like, oh, if you took the USDC trade, that was so dumb because you could have bought Bitcoin, and Bitcoin did better and all this shit. And I just thought, I just disagreed so much that I just thought, like, one, I'm not going to put as much money into Bitcoin as I did into that trade. Not in this lot, like, unless like something catastrophic. And even then, actually, like, I think, yeah, there's not many instances where I'd ever put that much money into Bitcoin as much as I did into USDC. And USDC was kind of binary in the sense, like, it had a time limit. I don't know, it was just totally different. So when I read that, I was like, man, it must be not like, I don't know. I just laughed. So yeah,
Yeah,
I don't know why.
if you're going to be dumb early, but So that, like left bell curving it, as we say, does work sometimes. Um, but like in all things, I guess it's like a lot of people use positive EV and they just throw it around. But it's like I have a distribution of expected returns. The market has an implied distribution of expected returns. Some other traders, and we all like the market sort of implies the general like volume weighted consensus, I guess, of like what everyone thinks. Um, on BTC, the variance there is like so much wider, and there's like downside risk or whatever. But if I was to like draw out like a histogram of what I thought the potential like probabilities for different returns on the USDC price, it's like I would be pricing barely anything on anything below 90 cents, like less than 1%. Maybe that was wrong. Maybe I should have bumped that up higher, but or at least it finishing there. It could definitely have touched there. I definitely would agree with that. But like I think people need to think more in terms of like what is the expected returns here? Like what is the risk profile I'm putting on? Like expected value here is just the mean of my expected distribution of where I think this is going to be. And if you were just like, oh yeah, just long Bitcoin, sometimes just because it worked out doesn't mean it was a good decision.
Yeah, and I think as well that that people who fall in that camp might have smaller accounts, so like they don't have risk units, like they don't have like, okay, like the way I see my capital is with blocks of capital. So I'm like, I'm going to put a block here, I'm going to put like a brick here, and that, you know what I mean? So that way it's like they're all sort of separate and I have strategy limits. I know you're the same, you know what I mean? So that way you're never overexposed to anything. So,
Yeah.
I don't think I'd put two risk units on Bitcoin, like outright position. I don't know, unless there was a reason I had. Yeah, I just
Even then, you'd want to be diversified. I don't think it's smart ever. Um, Even if you've got undeniable edge, you're like you're not putting the house in one thing, or you shouldn't, because it's stupid. I think that fear and greed is what really breaks a lot of people. In this case, that was a greedy move, right? Like you got not got a lot of money, and you think, oh, I can get 50% here, or I'm probably gonna. They're probably using leverage and thinking they can get more. Um, Fear and greed is what will kill you. Just you should be a bit more patient. Um, like would you rather a 50% chance that you're going to have $1 million in 3 years or a 2% chance that you're going to have $1 million in 6 months? Like, what's the rational decision here? And it's just be patient and just take the sensible trades as they come. And you'll, capital preservation is as important as making good trades.
and 100%, I completely agree. And with that USDC, by the end of it, it's like, with Bitcoin, I love like full disclosure, I love Bitcoin. Like I don't hold any or a lot of it. I'm not like I don't denominate my life in crypto. I denominate it in dollars. But I do think that yeah, I completely agree. And if you like, there's been so many times where people are like, oh, this is the bottom, or oh, it's going to rally or whatever, and then like they're wrong and they get chopped up, and then they have less capital for the next time. So by taking high probability good trades like that, you increase the capital you have, or so then you can take these big bets. So yeah, I completely agree. But we've run 20 minutes over, so I thanks so much for your time, Liquidity Goblin. I really do appreciate it, and hopefully we'll get you back on in a few months. We'll have another segment about us just riffing or whatever. But thanks so much. I really appreciate. Oh wait, where can people find you? Actually, maybe just where to find you on Twitter, or if they want to reach out and have any questions or something like that.
Yeah, just Twitter, Liquidity Goblin, all one word. I'm also the same on GitHub, publishing a few things over there. Keen to sort of work a bit more on some open source tooling stuff and collaborate. Um, I'm not have no intention to collaborate on strategies, profitable strategies, or working with other people, just as a thing. But pretty keen to work on stuff open source. If you want to have a look at the GitHub or shoot me a line. But yeah, find me there, GitHub or Twitter. Send me a message if you have something interesting to say. But yeah, thanks for having me on.
No worries. Thanks so much. I really appreciate it.